Well, thanks so much for joining us, Norm. We just wanted to, I guess, chat a little bit about the markets because the last 12 months have been pretty stellar in terms of returns. So we were sort of wondering what the next 12 months might be looking like and what you're sort of seeing out there at the moment.
No, thanks for chatting, Ash, and hi, everyone. Well, the answer is it could go one way or the other, which is a classic stockbroker answer, but a lot depends on the data coming out of US and Australia around inflation over the next 6 months. If inflation is orderly and doesn't break out to be too nasty, then you can probably expect more of the same of what we've seen over the past year, perhaps not quite as strong as last year, but certainly good. Whereas inflation starts to become a problem, well, then markets are likely to become more volatile. Particularly over the next 6 months, and returns could be up or down.
We're sort of getting, I guess, a lot of questions from clients around how hot the markets have been and if a correction is imminent. Is that sort of something that you think is a potential on the horizon as well?
Again, it all comes down to inflation because the world at the moment is heavily propped up by low interest rates. And so if interest rates are forced up for some reason to defend against inflation, then yes, we could have a pullback. But overall, markets they're not sitting at extreme valuations anywhere. There's certainly pockets of places that are actually quite cheap. And people just need to remember that there's very little elsewhere to put your money. So with money in the bank yielding so little, investments look very attractive.
Yeah. And what are some potential, I guess, strategies that clients could be implementing to help with that?
Yeah, well, so I think it's fair to say that times are extreme at the moment with COVID and ultra low interest rates. So the main strategy that we're trying to push home, and I know you guys do the same, is this idea of discipline. So first we'll stick to your liquidity and make sure that everything is easy to get in and out of, and certainly the stock market delivers that. Focus on quality, so the bigger, stronger companies, because they're able to ride through the ups and the downs of whatever gets thrown at us. And then the big one is diversification. So spread your money across asset classes and different holdings, because we can't really be sure what's going to win or what's going to lose. But collectively, we think that there's a very good chance of making decent returns over the next year.
Cool. Okay. Awesome. Thanks. I think that's
my pleasure.
Sums up what we wanted to get out there.
No, glad to help. It's interesting time.